I'm Amit Sharma. Thank you for that wonderful intro and for having us today. As you can see from our name, FinClusive, we are a firm dedicated to financial inclusion. We're a hybrid financial technology and regulatory technology. And our process, our systems, our strategy is really informed by 15, 20 plus years in the security and compliance related issues that have been growing challenges in financial services access globally. Goes without saying, but there are billions, arguably 2.5 to 3.5 billion people on the planet that don't have access to basic financial services, and that is disproportionately geared toward low, moderate income, global poor countries, women, minorities, and immigrant and migrant populations in international marketplaces. However, that statistic is actually undercutting an even larger problem that we have, and that is also organizationally, nonprofits to small, medium enterprises. 90+% of global job growth is in the small and medium enterprise sector. And if we think about the access that small, medium enterprises, entrepreneurial ventures, especially in the emerging and frontier markets, the access to basic financial services, credit, lending, and other forms of working capital to start and grow small businesses is the lifeblood. And so doing so now in an increasingly digitized digital economy is essential. The COVID pandemic has certainly exacerbated that plight for many, both small business support and individuals that benchmark on it. Now, the growth in anti-money laundering cannot be ignored here because, in fact, many institutions, traditional banks in particular, have looked at many of these enterprises, low, moderate income countries, global poor, as high risk. And when they do the cost-benefit analysis, they say, well, it's just not worth doing the business. And that incentivizes this concept of de-risking. And so certain types of clients and activities are disproportionately impacted and therefore pushed out of the system or denied financial services. But traditional compliance is challenging, it's redundant, it's inefficient, and needs a modernized approach. Importantly, the growth in non-traditional, non-bank financial technologies and ecosystems provides us a huge opportunity to drive inclusion because you really have 85, 90% cell phone and even smartphone penetration rates in some of the most rural and frontier corners of this planet. So we now have the ability to bring that kind of financial access digitally. What's important is we need to do it through human-centric technologies that are absorbable. Importantly, we have to provide that access in ways that are secure, that provide businesses and individuals the security in knowing that their personal identifying information and their financial transactions and engagements are secure. So it remains important to address compliance, and global regulators recognize this. And so they're increasing scrutiny in these new financial ecosystems, be they peer-to-peer, mobile, blockchain-enabled, virtual and digital assets, or the crypto economy. Many of these engagements provide tremendous opportunities for inclusion, provided we provide the appropriate compliance controls. And so these alternative financial ecosystems, coupled with traditional, with the compliance regime, is the strategy that we undertake. In FinClusive, given what I just described, we have what we call a compliance as a service platform, which is a modernized financial crimes compliance, anti-money laundering, know your customer, due diligence, and security and monitoring platform. And it's created for equal access to traditional institutions, small and medium banks, as well as modern fintech companies and cross-border payments and non-bank financial institutions. By doing this, we can then provide access for those organizations, individuals, to a growing roster of U.S. banks of record that can now offer them deposit and custodial services in insured accounts. So if you go back to the basics of finance, can I store value securely? We can provide that access to individuals and entities, no matter where located, in U.S. institutions, FDIC insured. That allows you to store that value securely. And then transfer that value securely. The ability to make payments, provide for remittances, which are 3 to 4 times official development assistance, and really in many emerging and frontier markets, the lifeblood for many individuals and households, as well as small, medium businesses. And by doing so, connecting new financial ecosystems, peer-to-peer value transfer, and other non-bank channels with some of the traditional, in a compliance regime, you can provide that financial access. At the end of the day, we care about building financial health because if we are truly working to build economic resilience, leveraging new technologies for that access, ensuring that that access is safe, secure, and transparent, and then providing that access in ways that anyone or any organization can access it, that's part of bringing economic resilience to organizations and households alike.